following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a wee bit, a dash, if you will, of education, and perhaps sprinkled on top a little cherry of hilarity. My name is Mark Longo from theoptionsinsider.com. By the way, the hilarity is not guaranteed, so your mileage may vary. From theoptionsinsider.com and the Options Insider Radio Network. And I am joined today on the old all-star panel, starting off with the man who looks quite pensive on Skype, beaming in all the way from the great state, indeed the empire of Maine. We have the rock lobster, none other than Andrew Giovinazzi of Option Pit fame. Andrew, welcome back to the show, sir.
Wow, I can't believe I'm first. I'm shocked.
I like to mix it up every now and then. Keep you on your toes.
You must. Andrew in Maine is doing quite well. The trees are down. The wood is almost cut. The ice skates are getting sharpened, and yada. Winter is getting ready to come here anytime shortly. And it looks like to the market too. We have a nuclear winter.
We do definitely have the winter in the market. No serious after effects from Hurricane Sandy up there?
No, I almost was going to take a couple days off and go down there with my chainsaw and maybe help cut some people out of, cut some of those dead trees down or something. But unfortunately, I didn't have the time to do it. But I was thinking about trying to be a good Samaritan, but if you walk around with a chainsaw in the middle of Long Island, I think you might get shot. So I thought it was probably best just.
I think thinking about it gets you half the karma points at least, right?
Exactly. Yes.
It's the thought that counts, right?
Exactly. Cutting down the dead trees. That's
you were doing it in your mind, and that's what really matters.
Exactly. It was kind of like a little fantasy thing of mine. I guess that's what happens, when you cut down too many trees.
Speaking of cutting down trees, we are also joined by the man from the mountains, a.k.a. Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, say hi to the good people out there.
I'm coming at you with guaranteed hilarity today myself. I am excited.
Whoa, guaranteed hilarity from Uncle Mike Tusaw. I like it. You're the one for the 48% guarantee, so guaranteed hilarity.
I give a 50% guarantee. That's cowardly Kavanaugh only with the 48% guarantee.
So guaranteed hilarity. I'm expecting big things now, sir. I think a lot of our listeners are.
Well, it's the 50% guarantee. That goes without.
Okay, so we'll hold you to that 48 to 50% range.
Dude,
so
hold me to
half
50.
of you better prepare to really laugh uproariously, and the other half just prepare to kind of scratch your heads in wonder, as we often do here on the show at Uncle Mike Tusaw. And last but certainly not least, we have the man holding down the Options Express hot seat, good old Sean Fitzgerald, joining us from the trading desk at Options Express. Sean, welcome back to the show.
All right. Thank you, Mark. Always a pleasure. It's been about 2 weeks for me since I've been on the show. We've been pretty busy on the desk, so we've been servicing our clients. But I am pretty excited for the show and look forward to any kind of comedy I can provide and also receive from my comrades.
Well, we got that 50%
giver
guarantee.
and receiver. I like this guy.
Speaking of comedy, just the term servicing your clients, I don't know the way you said it, it conjured up all sorts of very unsavory images in my head. So hopefully, OX, you guys weren't doing that during your 2-week hiatus here on the show. At least 1 week for Sandy, and then sporadic appearances therein. But yes,
they only do it over the phone.
Yes,
only over the phone.
Only over the phone. That keeps them safe in certain regulatory jurisdictions.
Safe servicing a client.
Oh yes,
as
Schwab Compliance is going to love this.
As Mitt Romney likes to say, we at Options Express like to give out gifts to our clients.
There we go. A little post-election humor for all of you still basking in either the glow or the agony of defeat from last week. But, of course, with the election in the rearview mirror, with the market in a bit of a tizzy these days, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we talk about what was trading, what was moving the old markets today. And it was another bit of a leaning down day, but not too heavily. Certainly nothing compared to what we saw last week post-election. We were down a little bit more throughout the session, closed a little bit softer to the downside there, with most of the major indices down about 0.2%, and the good old VIX cash just barely eking out a little bit of upside room, closing at 1801, breaking through the 18 handle to the upside, up about 0.5% or so on the day today. I know VIX, of course, was following the rest of the market and was up quite a bit more throughout the session as well. So maybe Andrew will start there. What's your take on the VIX action we've been seeing today and the past few days?
The VIX action has been a little, it's been just kind of steadily going up. I mean, let's just call it what it is. The realized volatility since the election, who knew that got me, they had me fooled. I just sort of thought, well, same guy got elected, same people in the House, fiscal cliff, like nothing's new. And then, somebody hit the sell button. So I was waiting for maybe volatility to possibly move. But it definitely blew through everything I thought it would do. And the market actually, the market did the moving. So basically volatility is just keeping with the market. I mean, we're down, 5% or something like that in the last week, or from right before the election.
I hate to get too political, but I think I kind of agree with you. I was kind of surprised that it sold off as heavily as it did. And I think some of that might have been I suppose you can call it somewhat strident tone that Obama took post-election, sort of acting like he had this mandate and didn't sound like he was too much in a bargaining mood. And so I think that probably helped spook some of the market as well, that the fiscal cliff we're heading towards might actually be a cliff and there might not be much compromise on the horizon. So I think that probably didn't help.
I mean, that was by far the biggest sell-off. Let's just put it that way. I mean, if we're gonna credit somebody with the biggest sell-off. And then the comments afterward, they start, well, our bargaining position is here on, tax increases. And, I think pretty much everybody that has half a brain left rattling around in their head figures there will be some revenue increases, however you want to call it, a revenue increase. And there's going to be some cuts. And the Republicans, ultimately, they go, you know what? If he's going to ask for revenue increases with no guaranteed cuts, we already have that worked out on January 1st. So that's their ultimate bargaining position. So, as much as the president might think he has all kinds of room here, he really doesn't, because 2 years is a long time in everybody's memory. If you have some sort of short-term downtick in the first quarter, who cares? Everybody knows what it's going to cost from now on, and then you can move on. It's just the market hates not knowing what's going on. And that's why there's no bids at the end of the day, or actually all day long. So, and I think, volatility, I'd say at this level is fairly priced based on the movement we've had over the last week. Is it going to continue? Do we see that would make us trading like 1300? on the S&P 500 before, actually basically before Thanksgiving.
Yeah, that'd be an aggressive downside move, yes.
It would have to, that's kind of what we need to see, sort of that 1.5% per day, like spank. And it could happen. Although today, actually, I did catch that action at the end of the day. We did see a little markdown on volatility there at the end of the day. That'll probably be my blog tonight. But the VIX up slightly, but really implied volatility in the index down slightly. Skew kind of rose a little bit, and I think that takes that is a slight. It's kind of the slight nod. The volatility market saying, well, maybe it's going to calm down just a little bit, but it literally is the first real downtick we've had. That's, like 4 days or something like that.
Yes. This is the first realized vol we've actually seen in quite some time, since June. We've been kind of looking out there for saying where's the actual realized vol to underpin all this implied vol we've been seeing floating around, right. And this is the first time we've actually got some. Whether we can,
it is here.
Yeah, it's here. Whether we can sustain it or not, I don't know, or whether just a couple of days of aggressive sell-off. But speaking of aggressive sell-off,
one little comment on the VIX.
Go ahead.
I'm looking at a 10-day chart on the VIX. Election was the 6th. The VIX closed at the close of markets on election day, 1758. We closed at 18 today. So we've had a few, up and downs. We went down to, I think we briefly touched 16, and now we're back up. But if you look from election day close to today, it's barely up anything. So there's a lot more going on than just people want to blame Obama. People want to blame that everything is the same in Congress. But, I've talked to a few what I consider professional traders today, and they're also pointing out to, physical cliff. You can say that will probably go down as the most used phrase of the year and most used Twitter phrase you may ever hear of in 2012. But what they did point out is not only a physical cliff could cause some drastic VIX spikes soon, but people are ignoring this slowdown in earnings. The problems in Europe are deteriorating once again. Germany and France are getting dragged into this morass, and China is slowing as well. So it's not just the U.S., Obama, and the physical cliff.
And, if you do look at that chart of the S&P and the VIX, we have sold off aggressively in the S&P since the election, and yet, the VIX is not exactly off to the races. It had a bit of a spike, but it's kind of been vacillating now around these levels. So if you look at where we are in the skew curve, you can actually say VIX probably has come off a bit since then, just in terms of where we should be perhaps on these aggressive moves.
It has.
Yeah.
It's like it's priced. A lot of this movement was priced in. I'm not saying the market is screaming buy, but a lot of this was priced in prior to, and it just really never, and I think the realized vol sort of caught up with where everything was. So,
speaking of all this talk we have here of VIX and SPX and all this fun stuff, I was at a conference yesterday where people were getting into the mix of these fun things we like to talk about on this show quite a bit, VIX versus SPX and all these little fun metrics they're in. And they were a lot of different quants presenting a lot of different research on a lot of different topics, but there are a couple of interesting points that, too many to really bring up on the show right now. A couple interesting ones that caught my eye. You mentioned, of course, we've talked a lot about on this show about the end of day volatility we've seen in here. You mentioned it again today, Andrew, about how the end of the day we saw that rally. And there was one, I forgot what firm he was with yesterday, was talking about the volatility of VIX futures versus the cash, and how at the end of the day, in the final closing minutes of the day, the VIX futures are roughly 15 times more volatile than the S&P or the other equivalent underlyings for the VIX and the options. So that just goes to show you how much of that is the program stuff of all these ETPs, we've been talking about for quite a while now, coming to play in those final few minutes, hedging whatever their exposure is for the rest of the session. And of course, some other things too we talked a lot about on this show about SPX and the more direct, or maybe SPY puts, and the more direct hedge versus a VIX upside call, and which one is preferable, and yin and yang, and going back and forth on that quite a bit. And it seems like a lot of the research these days is starting to lean more heavily towards the indirect hedge, the VIX. There was a guy up there yesterday too, I forgot where he was from, another quant from another firm, running through a variety of scenarios that they had run through in their system, looking at straight up SPX puts versus VIX calls, and then SPX put spreads versus VIX verticals, and then ratio put spreads versus VIX ratio call spreads. And in pretty much all the scenarios they ran, the VIX substantially outperformed on an annualized basis. Now, of course, there's a lot of caveats thrown in there. They were picking some crazy strike prices. I think it was probably 97 to 90% puts versus like 25% out of the money calls and things like that. And I didn't have a chance to really ask them how about their methodology, how they chose those strikes, whether that was where the premium lined up or there was some other methodology for why their calls were so far out of the money. There wasn't really time to get into it. I have all the material here. I need to just dig into it myself. But it was, I think, interesting food for thought that a lot of the people who have been leaning on the direct side of the fence, I think a lot of us on this show have for a long time, a lot of the results, a lot of the research is starting to lean the other way now, that the VIX, particularly in these crazy scenarios, really outperforms, and that tends to give it the edge in a lot of these different events. A lot of interesting talk too about pricing in tail risk and how everyone and their mother is doing that now, and so the tail risk essentially has been priced in, and you're paying levels that are just absurd for a lot of this tail risk. One guy also made a great point back when the VIX cash hit 13.5, its recent low, and everyone in the media, everyone and their mother was saying how volatility was so low, VIX was so low. You look at the term structure, another thing we've talked about quite a bit on the show, the term structure of VIX futures, and you looked at actual legitimate VIX hedging, not 1 month, but kind of rolling out a few months, 3 months, 6 months. If you looked at the 6-month VIX future compared to where the VIX cash was, it was trading at approximate levels to where the day after Bear Stearns melted down. So if you looked at actual hedging with volatility and the actual levels you were paying, vol was not really cheap at all. So there's a lot of
like 26 bucks.
Yeah, it was like 26, 20. It was like 26, 28, something in that crazy range. Yeah. So there are a lot of interesting points that I think were just coming out today, and it's kind of stuff you just like to, I like to do a whole show on that kind of thing. Luckily, we have a show called Volatility Views where we discuss these things in more depth. I just wanted to kind of bring it up on this show because there's a lot of great little ancillary points. There's a lot more I'd like to get into, but I'll save that for another day. But I know it's just interesting. I think a lot of our listeners should, if they have been looking at these different types of hedging and strategies. I've seen people also compare VIX calendars versus S&P put spreads, and you have to do a lot of interesting nuance on the VIX side, but it seems like if you do that, you can put something together that is a little bit not a little bit, actually in overall returns is preferable to, to the actual direct hedge that we've been talking about quite a bit. So interesting stuff. I think we'll put some stuff up about it on Options Insider. Maybe we'll put some stuff up in the show notes here to get into more links to some of the specific research. You can read it yourself, dear listener. But some interesting stuff. Now, speaking of aggressive sell-offs and not being able to find a bid, Uncle Mike, I know you've been watching with a keen eye as your favorite fruit company yet again could not catch a bid today. It was down over 12 handles at one point, I believe. It closed today down about 11 1/4 to 5.25. I know you were dancing on the cusp of perhaps writing some puts and perhaps getting back into the fray. Since the last time we talked to you, what has transpired over there in the KYO offices?
Well, before I get into that, I still want to just go on record to where I think that although the VIX is a great product to trade and there's a lot of interesting studies that go along with this, I still want to go on record and say if you are hedging your serious nest egg, then using the VIX to hedge your nest egg, I'm not talking about your trading account, I'm talking about your long-term investment capital. Using the VIX to hedge it is like buying car insurance on your home. They're two different things, and there's no guarantees that the VIX is going to have the type of relationship of movement that are done in these models. Yes, it's historically shown to have done that, and there's studies that show that, but I like to tell my clients that if we're in SPY, that if SPY goes down 20%, we have a put in SPY. So I just want to go on record to where that's a key difference that needs to be made, is that you have your trading account, you have your long-term investment account. They're two different things. That's
why I mentioned you have to go through a lot of nuance to really make the VIX part perform. I think for a lot of our listeners who aren't going to go out there and do, ratio VIX calendars and things like that, the direct hedge is still preferable. In most scenarios, I think, near term, it really tends to be comparable and perhaps can be even outperform. It's just when we see these crazy scenarios that the VIX kicks in and gets the extra bang for your buck. But in most day-to-day hedging scenarios, I think most of our listeners would be better off with an S&P put or put spread, just because the ease of use, ease of understanding. You get Vega, you get Delta, you get all these things that you can rely on, understand cognitively. That's going to move with your portfolio in some certain given percentage. The VIX is still a crapshoot on any given day what it's going to do. So
it also takes a level of of course I'll toot the option pit horn, but it takes some level of education to use it. You're not just going to go. You could end up doing the opposite of what you intend to do because you don't understand how it works.
Yeah, that's true. If you have to have a very good understanding of it, and I do understand how the VIX works, but for my longer term clients, I don't touch it because of the fact that if I want to hedge Apple, I'm going to buy Apple puts. If I'm going to hedge Ford, I'm going to buy Ford puts. And I think that even though the direct hedge is more expensive, and yes, I will get more clients yelling at me when Apple goes up and we have all these puts that we're wasting our money on, so to speak. I'd much rather would have those phone calls than when the market doesn't move in lockstep with the VIX, or in the inverse correlation to the VIX that a lot of people expect it to, and that type of thing. Now, in terms of setting up trades, like what they do at the option pit and what they're doing to, if you're looking to do like some type of a correlation pair or something like that, God bless the VIX. It's a wonderful, awesome, super product. But for your nest egg money, I'm still a fan of the direct hedge. But not to get too far off topic, getting back to the fruit company, what we decided to do is we're going to wait till after Black Friday, see what happens on that day, and then take a look at Apple. But I got to be honest with you, this is like Eve ate the forbidden fruit back in Old Testament times. She ate the apple, and I got to tell you, I'm feeling like Eve right now, trying to hold off and getting back into it.
Take that bite, Uncle Mike. Just write the 500 put. What can go wrong? What could possibly go wrong in that scenario, sir?
I literally got a chill up my spine when you said that, because you're like the angel and the devil on your shoulder. That's just what
I'm channeling your clients right now.
What level is cash in Apple? Like 100? Is that like how much cash they have, stashed in China somewhere?
Yeah, they
like
have about 100 billion. I'm not sure how many shares they have outstanding, but it's probably somewhere in that level. I wouldn't be surprised.
Yeah, because
guys, I gotta go. I'm seeing some bids in the aftermarket. I gotta go. It's Apple.
You're off. You're off. Go with God, sir. So you nothing concrete yet. No puts have been written. Nothing like that. You're just kind of sweating and hovering over the keyboard.
Yeah, just basically wait. I want to see what happens with Black Friday. That's going to be our mark. See if there's any huge news on that, because what I'd like to do is have it kind of bottom out and then start to come up. Whereas right now, normally I don't mind selling puts on a down market if it's something that I wouldn't mind owning for the long term, but it's Apple. That's all I got to say about that.
Exactly. So, and Sean, what were you watching? Anything catch your eye today? A lot of your players perhaps coming in on Apple today, or are they diving into Dell? What was going on over it in OX?
Funny you mentioned Dell. I'll get into most of the trading activity during the Xpress Block, but I was getting a lot of interest in Mr. Dell. I had a lot of bullish, a lot of bearish trades. I had, usually, one day it'll be all tech, or next day we'll move the crude and silver. Today was a very diverse trading day. Me personally on the desk, the types of calls I was receiving. So I'll be talking mostly about that trading during the Xpress Block. But Dell earnings are out. I see they have plunged 47% from this time last year due to weak PC sales. However, the stock really isn't affected too much.
Yeah, stock not exactly taking the walloping you'd expect. It's only down about 14 cents. It was actually rallying for a while. There's trading $9.75 for a little while when we first started the show. Closed today at $9.56, trading about $9.42 to $9.46 right now in the after hours, and seems to have stabilized with some bids down that level. So yeah, certainly not the Dell apocalypse you might have expected given those earnings. Perhaps I haven't seen the guidance they gave. Perhaps they said we're looking forward to Black Friday and that's going to save us, or we have some great sales in store. I don't know. But the Dell as a whole is just in a rough space right now. They've seen people making money in hardware like Apple because those are premium products, whereas Dell still sells commodity products, and all of the things they've tried to do to break out of that, like the Dell Streak, their first smartphone that was enormous. They were kind of way ahead of the big smartphone curve. That was a 5-inch phone before big phones were hot, so now that imploded in their face. And a lot of the other things they've tried to do to establish a name for themselves in consumer electronics have really kind of blown up for them. So still holding pretty strong right now, but interesting name to watch, because the future for Dell is kind of murky at this point, and whether it's in commodity PCs or whether they can finally transition into some premium consumer electronic stuff where the actual margins lurk, hence Apple trading $5.25 and Dell trading $9. Anything else caught you guys' eyes today before we dive into the old odd block?
NTAP. Got a lot of calls on NTAP, doing anything from in the money, out of the money calls, various spreads. Stock up 308 on great earnings today, almost 11%. I don't know if you guys got any interest in that, or we're talking to your clients, but an array of calls, at least 10 to 15 calls on NTAP today. A lot of clients excited, buying last night, going into today. I'm not sure where I was missed on that tip, but most of my clients are very happy with the result of NTAP today being up 11%.
Yeah, of course, network appliance rallying pretty hard today, up about 3 handles, usually doing about 13,000 contracts, did nearly 40,000 today. So it was a banner day. Looks like a lot of love on these Nove 31s, which are kind of near term out of the money calls now, as well as some Nove 30 puts. So maybe people legging into some risk reversals there, and a bunch of other strikes lighting up the tape. Tons of volume. And it's not a name you hear much anymore. I used to hear about a lot on the floor. I haven't heard many people coming to me saying, hey, I'm trading NTAP these days. I guess just around earnings time. I don't know. Interesting one, kind of for the old record books. But now, speaking of record books, we're going to close the book on the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, so first up on the old odd block today, we have another one of Andrew's favorites. I know you love the gaming sector, Andrew, so I plucked these just for you, sir. This is, of course,
I appreciate it.
Not gaming like casino gaming, but gaming as in controllers and Xboxes and whatnot. And we have GameStop. This is pretty much the primary in-person, in-store game retailer these days, closing up today about 4% after better than expected third quarter earnings this morning right before the bell. Interesting, another company facing a bit of a crisis with their model. Talking about Dell facing commodity PCs, now we have GameStop, who for years, actually they have a very interesting model. They've essentially created themselves as the sole market maker in physical video game goods. So if you go buy a game from them, let's say for $60 on retail, and then you play it, you go back to them a week or two later, you can sell it back to them for, I don't know, 20. They make this. They're the only players in town, so they have this fantastic spread. It's kind of like the dream you used to have when you were a market maker, that you were the only guy in the pit and you could be as wide as you wanted. And GameStop has done that for themselves and done very well for a long time on a spread that is just atrocious. I mean, they will take 20, 30 handles on a used title and just flip it and make a ton of money. Like, apparently, that model's still doing all right, even though a lot of people are switching these days. In the future, apparently, really is in digital distribution. I don't know how GameStop will keep its lock on that stuff going forward, but apparently that's not a big deal because they sold 1 million copies of Call of Duty Black Ops last night during a midnight launch, so that's all that matters for earnings apparently. The stock off to the races, up about 4% today to 24.5, closing on the day. Not surprising. Saw people coming in and blasting out some puts. We saw people selling the Dees 24s. Not a ton of volume, but they sold those for about $1.33. We also saw about 2,300 of the Dees 23 puts going up. The bulk of those sold for around 80 cents or so. And of course, we saw 5,000 puts going up on the Dees 20 and 22 strikes. Combined, the bulk of those trading and being sold around 23 and 58 cents respectively. This is the name that does about 9,000 contracts a day of late, and remember that's inflated because of earnings, and now they did over 24,000 today. So a lot of activity in this name, and kind of a surprising activity really that it's so bullish out there. And a lot of people have been kind of making the death watch on GameStop for a while. It's kind of like making buggy whips at the turn of the century. They're going to have to reinvent their model eventually, and who knows if it'll be as successful as the one they've had, where they were, like I said, the sole market maker in the used game market. Now they'll have to move on from that. But so far, apparently Call of Duty was enough to boost them into the stratosphere. Andrew, I know you like the gaming sector. You ever take a look at GameStop? Does physical game retail blow up your skirts?
You know what? I almost wanted to say I know you were gonna say, "Oh, Andrew, did you trade?" But yeah, I did used to trade GameStop, so it was a good trader for a long time.
You traded this one? I didn't think this one has been around that long. I mean, it has been around for a while. Was this like Pecos days? When did you trade this one?
Like 06.
Okay,
unless I'm totally mistaken. It's just I've had some positions on it.
Yeah, they were around then. I didn't realize they were optional back then. But of course, they've grown a lot in recent years. They've acquired a lot of other chains, so there's a lot of GameStops now where they were. It's
possible I'm getting GameStop confused with Radio Shack. That's entirely possible.
Similar companies.
Yeah,
but the thing is,
I go to GameStop to buy my batteries, and they take my email.
Unfortunately, I got a lot. There's a little too much water under my bridge, so I do have these senior moments. We'll call them senior trader moments.
You're a very promiscuous man from a trading perspective, Andrew. So
yes,
you've had many dalliances over the years.
50 handle though. This is a little $24. I remember being a little nice.
Yeah, so perhaps it was Radio Shack. Either way, interesting retailers, both facing crises in their future from their business model perspective. But an interesting one.
GameStop seems to be, managing it much better though than Radio Shack did.
Yeah, if you ask me right now, what does Radio Shack really do? I just have to scratch my head. Aside from odd audio components and batteries and the occasional cell phone, I guess you can go there and get a cell phone now. Aside from that, I don't know why I would go to Radio Shack for any product. I don't say, I need to go get my TV. I'll go to Radio Shack. You just don't do that. But yes.
Yeah, they sell electronic like little doodads.
Yeah, I go there when we do a lot of audio setups here. Obviously, we buy a lot of cables and things and little adapters from them, and I'm sure that's not an entire business model in and of itself, but that is one of the few things they have that is unique to them. Moving on to another one. This one's been on the Odd Block before. This is one of, I think, Sebastian's favorites. Ladies apparel. There's men wear it too, but it's primarily started off as ladies. It's Lululemon, ticker symbol LULU. They closed today. It's fractionally down on the day to 65.87. This is the name that does about 17,000 contracts a day of late. Easing off that today, only doing about 10,000 contracts. And what we saw was, they pretty much had some gains, and they kind of reversed them during the session and kind of ended up pretty much unched. What's interesting about this one was a couple of things, but what really caught my eye was how often do we talk on the show about selling weeklies, and 90% of the volume going up in weekly options is sales. No one can hold these things for more than a minute. Tusaw was joking last week about this client who bought his put and was freaking out over 2 days worth of decay. It's just people can't hold these things. And here we have people actually buying some weeklies here in Lululemon, the Nove 70s. The 1 week to go. So these have about 6 days or so. Actually, these are... Which ones did they buy?
Those are the week 4 Nove 70s.
Yeah, the week 4 Nove 70s, and these are about 4 plus handles out of the money right now. So it needs to jump about 7% for these guys to do it over the next week or so. So interesting stuff. They traded for about 30 cents here on the close, and I can count on one hand the number of times I've seen any substantial buying in any weekly option whatsoever. So the fact that people were piling into Lululemon weeklies today was kind of interesting. We also saw some put sellers on the Nove 62 half strike. Again, these are actually just straight up Nove trading for 36 cents. So interesting. Maybe someone legging into some bullish risk reversals there using Nove versus the weeklies. Either way, interesting stuff. Nove essentially is a weekly now as well. But yes, interesting stuff going on with some weekly love here. They make premium yoga pants and running gear.
What's even more interesting about that trade is not only weeklies have very little time value. I mean, next week we have the holiday on Thursday, and generally the day after Thanksgiving, which is when these November 70 weeklies expire, is a very light volume traded day. So compared to the average weekly, this weekly has less time value more than
you got
the average
very
week.
little bang for your buck going here. You only got a couple trading sessions, and as we talked about it many times, we'll get to in the round the block. Going into a holiday week, that premium comes off really quick. So not exactly, the clock's ticking on these, so we'll have to watch them and see. But I take my hat off just for the odd person out there who actually decided to buy some weekly calls just to mix it up a little bit. And speaking of mixing it up, we're going to close out the old odd block for right now and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where the boys from OX, namely Sean, today hold down the fort and take over the old program. So, Sean, you said you had some interesting Dell activity to talk about. Let us regale our listeners, if you will, with some tales of Dell, sir.
Yeah, I mean, I'll talk about some of the trades I had today, and then I wanted to go into the new series program that many of the exchanges are now trading options that are 5 weeks out. So I'll go into that a little bit more in detail after the trades I discussed with many clients on the phone today. Beginning with Tusaw's favorite, Apple. Went out to January, sold 600 of the $700 calls naked at 77 cents. Now, this obviously is a rather valuable client with the option requirement on a trade like that being over $3 million. But we did sell 600 of the $700 calls, taking in a 77-cent premium per contract. Moving on the flip side, a little bullish trade here. The triple Qs going out a month to the December 58 puts, with the Qs closing today around 62. With about 4 weeks of time value left, I had a client call in and sell to open 600 of the D's 58 puts, taking in about 37-cent credit on the average there. Again, these are some more of the highly high intel clients, because you're selling naked calls and puts. Obviously, you need to have the requirement to plunk it down. A nice VIX spread here, moving into the month of December. Sub Seabass may like this, or I wish he was on the show to hear it. 1,000 times across the board here. We sold a VIX put spread. Bought the 15s, sold the 16s. This is in the month of December, and we took in a quarter credit. So we have $75,000 in option requirements with the potential to take in a couple G's. So with our earlier VIX discussion, the trade can work out well as long as the VIX remains above 16. Moving on over to the SPY. Had a nice call spread there. This is actually a call spread that expires tomorrow. We sold the 137 calls, bought the 138s. We did this 320 times just for 8 cents. So not the biggest trade in the world, but with $30,000 option requirement on a trade like this, the SPY closing around 135.5 is my last guess. Last time I looked. So you sell those 137s, buy the 138s. As long as that stock doesn't touch 137, this client's taking home about $2,500 winner. Again, selling 320 spreads at an 8-cent credit. And last, we did have Walmart. Before I go into my Dell trades, Walmart did have earnings this morning. Disappointing early on. Did break below 68 and then came out a little higher. So I had a client call in who believed that was pretty much near the bottom. One of the more high-end clients sold 750 of the December 67.5 puts to open at about $1.12 average. Dell closing around Walmart closing around 68.72. So client pretty confident that when that Walmart did break 68 today and bounce back and hit 68.72, he was pretty confident that during my discussion with him that was pretty much the bottom. So he did quickly hop in and sold 750 of those puts. Naked, of course, at $1.12. Moving on to Dell, as we talked about earlier, Dell did just come out with their earnings in the after hours. From early readings, I did see that earnings have plunged 47%, mainly on PC sales being pretty weak. I haven't heard of anything about future guidance, so given the earnings being so bad, the stock is about $9.40, so down about 2-3% in the after hours. I don't know if these were a publisher recommendation, but I was getting quite a few calls here, mainly on two strikes in particular. The November 10 calls that expire tomorrow. I did over 1,700 contracts today at just 18 cents. Those look like they're going to end up being losers, given the fact that the stock is down. But buying a little bit more time premium, again, highly in the money here. December 8 calls, I bought 400, average price of about $1.70. So the stock around $9.40 right now. These $8 calls in December, those clients have some more time. The ones buying the November 10s, they're going to need a little bit of luck tomorrow morning. That's pretty much as far as goes with the trade desk today and all the different calls. Obviously, we do get a taste of everything, but I felt those trades stood out the most. This morning, I started getting a lot of phone calls of clients thinking there was something wrong with the Options Express website. What are all these different weeklies showing? Well, right now, going further, a lot of the exchanges will now be showing options going out 5 consecutive expiration weeks. So right now, and it's not on every single stock, and it's not on every single stock that has a weekly. There's a handful of them, the more of the big boy players, the Qs, the Spiders, the GLDs, the Apples of the world. Right now, you'll not only see a monthly, you'll see a November week 4, a November week 5, December week 1, December week 2, and also the December monthly. So when you look at your website, don't think there's anything wrong with it, whether you're an Options Express employee or a client or trading somewhere else. There are various weeklies. So it should be pretty interesting. A lot of interesting spreads I expect in the future. And I think this is a pretty good move on not only the CBOE's part, but also the ARCA exchange for doing this as well.
Yeah, they're taking what works and running with it. Weeklies have been the big hit of the past couple of years, so why not keep expanding upon it? And that's what they're doing. You're right. We got a lot of inquiries over the past few days as well. What's going on with these? What's all these weeklies showing up on my screen? And so I think it threw a lot of people for a loop who weren't necessarily prepared for the onslaught of weeklies to come. But this is a good thing. We talked about this on the show a lot in the past, how the original way they listed these, kind of just throwing them out there to the wolves and then leaving the next week kind of up for grabs, and they list that one, and it was kind of a big crapshoot over what was coming up the next week, and it kind of facilitated this rush to premium selling that we've seen in the weeklies. Now that they're listing more of a full strip, kind of like what they do on the futures option side. Hopefully that will lead to some more nuanced trading, some time spreading, selling week 1, buying week 4, week 5, that sort of thing, and doing some interesting spreads and ratios there. Interesting stuff that you couldn't do before because the product simply didn't exist. So interesting stuff. And I'll give our listeners another rundown on Dell. Dell still holding firm, $9.36. I agree. Those Nov 10s not exactly looking too stellar. The D's 8s have a little bit better shot, doing a little stock replacement there, but those are going to come off a bit today as well. Tomorrow as well. So not going to be looking too great on those, but better than the Nov 10s, where at least they still have some skin in the game going forward, where those Nov 10s are just going to be gone. But Dell still holding up, $9.36. Looks like here they're saying that they pretty much they came out with guidance in line with analyst estimates, and they reaffirmed their 2013 guidance. So it doesn't sound, at least from this headline that I'm reading here in this summary, that the news was too apocalyptic, and certainly the stock is not reflecting a massive sell-off, trading about 932 at 939 right now, so not off about 20 cents. So certainly, I guess people were expecting this big one. Not surprising. I think Dell, like a lot of big PC manufacturers and consumer electronics manufacturers, they're all waiting for Black Friday. That's where their sales kick off. And so who's buying a PC now? No one's buying a PC now. Everyone's waiting for for the big sales to roll out in a couple of weeks, or even in a week. I can't believe we're a week from Black Friday. But yeah, that's where it looks like we'll be seeing maybe some more action from Dell. So maybe your guy buying the D8s there, Sean, is onto something. It's gonna be a nice pop going into Black Friday.
Yeah, it should be.
Unfortunately, your Nove 10 guy won't last that long, so he won't be able to see that. But
one last thing on all these weeklies out to our listeners here. Please be careful when you're trading until you get used to this. Obviously, you all know you can customize your trading screen. If you're not trading weeklies at all and it just looks like there's too much there, customize it and take the weeklies out. If you are trading weeklies, after you hit that preview order button, please review your trade. Make sure you're trading the correct week.
Yeah, I've been caught by that a few times where I haven't entered the order, but you're looking around, you're doing a couple of things at once. You click on one thing thinking you're clicking on, let's say, regular front month. You click on the weekly by accident, or maybe you click on the wrong weekly. You have to definitely do that second glance. Say, wait a minute, how come my option is now a third the price? And you look, wait a minute, it's the weekly I'm clicking. So yeah, that's certainly, if you can filter that stuff out, it makes your life easier.
If something's too cheap to buy, it usually is a reason why it's there, so I highly recommend it. And if you're if you're a premium seller and something looks like it's very pricey and you think you can grab some, please double check, make sure it's the proper weekly.
All right, thank you for that, Sean. And that's going to do it for the Xpress Block. And now we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, a portion of the show where we discuss what we're watching for the rest of the week into the weekend. And as we talked about earlier, it is indeed a holiday week we're coming up into. So as we've admonished many people in the past on this show, be careful with your trades going into these holiday weeks. Of course, premium tends to erode at an aggressive pace going into these shorter session weeks. That said, it's not exactly an excuse to go out and blast out premium and hit bids left and right. Of course, we've seen a lot of things developing over the past few weekends, a lot of big news, a lot of big movement that if you look at Hurricane Sandy, people went home thinking they could close out the rest of their Apple positions post-earnings on Monday, and sure enough, they didn't open up again until Wednesday. So that is not a recent reminder for you that there is literal weekend risk out there. I don't know what is. So maybe we'll talk, instead of just cautioning you to not come in and try to blast out premium on Friday morning or even Wednesday afternoon. Maybe also look for some bargains. There's going to be some people are taking advantage of these weekends to really, in long holiday weekends, to blast away at premium, perhaps in an over-aggressive style. So as you start getting towards the latter half of next week, maybe late into Wednesday or certainly Friday morning, if people are aggressively taking out the decay, let them do it. Let them roll it into Monday or even Tuesday for you, and then take a free weekend off their hands. So it's not, I know we don't counsel buying premium that often on the show, unless of course you're talking to Andrew, then that's all he does is buy. But but it still is an interesting scenario. You have to definitely be cognizant of your decay on these long holiday weekends. So that's probably the first thing I will counsel our listeners about. What else are you watching for the rest of the week aside from excitedly and perhaps nervously hovering over the Apple button there, Uncle Mike?
Well, I'm waiting for the metals to really break out. Just looking at gold and silver, they're starting to come up a little bit, but it's still not breaking out as much as I would like. So I'm watching that, and then probably not going to be doing too much over the next few days. And going into a Thanksgiving week, don't really like to do stuff too often then. But basically watching the metals to see if we get some type of movement on that, and then seeing what happens on good old Black Friday.
Of course, we didn't mention Facebook. Everyone was waiting for the big crush of Facebook with all these stocks, all these shares coming unlocked. And, of course, Facebook indeed bounces to the upside, trading up a couple handles today, closed down a little bit, but certainly closing today at $22.17. Certainly, I think not a lot of people expected. A lot of people were expecting Facebook to sell off again, and not doing that. You getting a lot of activity? You watching a lot of Facebook over there, Sean, for the rest of the week, or anything else? What else is catching your eye for the rest of the week into the weekend here, Sean?
As Tusaw said, I've actually been watching gold as well as Once we got close to the 1800 level, I thought, I was looking for a little bit of support. Let's see if we can break through that, and we did not. We came right back down to almost 1700 where we are today. So as Mike mentioned, I've been paying close attention to this gold, seeing if we could break through that 1800 level, and I thought we were going to do it, and a few weeks later, we pulled right back down to the 1700 level again. Watching that next week, Tuesday, pretty much a parlay from Dell's earnings. We have Best Buy, which obviously sells Dell products, and Hewlett-Packard, both on Tuesday morning next week. So I'll be looking forward to those earnings.
Yeah, Best Buy, another one facing some interesting challenges to their model, their old brick-and-mortar retail. Not exactly the gangbusters business that it used to be. Everyone goes to Best Buy now to look at their TV and to take a look at it and kick the tires, so to speak, and they go buy it on Amazon or something else. So that model certainly also in flux, just like the GameStop folks. Andrew, what are you watching for the rest of the week into next week?
We did watch Facebook. We thought that was a fine 1x2 call spread type trade for a credit. So that exploded in the right direction. So we had some happy clients on that. It's one more buying premium. Just I just didn't see all 700 million shares going for sale. So
all this premium buying talk, Andrew. You're just such an optimistic fellow. You just buy all day. You're when in doubt, palms in kind of guy.
When I think something's going to explode. I try not to just buy it when I got nothing else to do. Another thing too, I'm watching the volatility markets. We spend a lot of time watching the vol markets, and here at the end of the day, and there's a lot of very flat term structure, slightly backward term structure, stuff like that. So, it's with the holidays coming, there's some back month support in December for volatility because of this fiscal cliff. I don't know if the volatility is really going to disintegrate down to the 13 level. I doubt it. Probably lucky if it sees 15 or so again on the VIX, but those type of trades I think are going to work a little better. We're going to beat around here a little bit for a while. It feels like we can go a little lower, we can go a little higher, but without any real resolution on this thing, and I can't really imagine these guys resolving anything because I don't think a politician has ever resolved anything ever. So. And I think those kind of trade setups are going to work better. So that's the kind of stuff we're looking at.
I like it. We tend to take a dim view of politics in general here on the show. I think we all can agree, at least on that point, and probably most of our listeners as well. A politician has never solved anything. I like
politics and analysts.
So you're not a fan of the Louisiana Compromise, I assume, then?
Well, the Louisiana Purchase?
Louisiana Purchase, I'm sorry. I'm mixing my metaphors.
Too much of a compromise for him.
I'm mixing my metaphors. But yes, I think we all can agree that politics is indeed the other dismal science, perhaps next to economics. Another thing we take a dim view of here on this show. But unfortunately, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, I'd like to check in with all of my cohorts here on the old All-Star panel to see what they have coming up that may interest you, the listener. Starting off this time with you, Sean. What's coming up in the land of OX?
Well, we do have 2 live webinars. I'm always pushing clients or potential clients, if you're ever in these areas, we have a workshop on December 1st in Houston and on December 8th in Boca Raton, Florida. You can find out all information about these workshops. They are free. They're an all-day trading event from 7:30 to about 3:15 local time. You can go to optionsexpress.com, click on the Educate tab to learn all about these types of workshops. If you're not interested in workshops or cannot meet them, you can also visit our almost daily webinars that we have various hours, anytime from 9 o'clock in the morning, somewhere at 9 o'clock in the evening to fit everybody's schedule. We got some pretty neat webinars coming up, learning about different Fibonacci tools, credit spreads with weekly options, and also just a basic tour of the Options Express trading platform for those who are not a member of Options Express yet and just interested in learning what we're all about. Again, just go to optionsexpress.com, click on the Educate tab. You do not need to have an account to go to any workshop or webinar. Click on the Educate tab. Highly recommend it. You will not be disappointed.
All right. Thank you for that, Sean. And Andrew, what is coming up in the land of the pit?
The land of the pit, the first. We have a big webinar or a big lecture webinars with the SIBO and the street on December 1st. Go to optionpit.com/events and check it out and sign up. And also, Mark, if you sign up for that, I believe he'll give you a deal on, he will include that kind of with a gold course for December or January. I think we have a couple slots left. So that's kind of the Christmas present, I guess. That's how I'll say
The
it.
holiday present from Option Pit to
yes.
you, sir. Well done. Now you may go about your business. And last, but certainly not least, we have the man from the mountains, Uncle Mike. What is coming up next week? Is there indeed a KYO webinar train next week during the holiday week?
Yeah, Thanksgiving night. No, just kidding. No, we actually, for last night, Thursday night, since this show is being played on Friday, you guys missed a great webinar last night with Eric from QuantTrade on day trading futures. But we are going to have another one coming up on November 27th. It's a Tuesday night, I believe. And that's going to be with the boys from E-mini Executors, just with on how they do their futures trading in general. So we're excited about that. And we're going to continue to run this train, baby.
Thank you for that, Uncle Mike, and that unfortunately is going to do it for this episode of the Option Block. But before we go, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a success. If you'd like to learn more about any of the topics we talked about today or listen to any of the other programs on the ever-expanding Options Insider Radio Network, then by all means, just surf on over to theoptionsinsider.com. You'll find everything you're looking for and much more over there. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.